Hi everyone, this is Yvette with VSTA Solutions on Tax Tip Thursdays, and today what I wanted to cover is the S Corporation. So if you're a single member LLC electing to be taxed as an S Corp, this applies to you. Obviously there's a reason why you did that. Usually it's strategic. You want to start saving tax dollars because you're paying too much on tax at the end of the tax season. You're probably netting about 50K or more in revenue. So that's usually when you elect to be taxed as an S Corp. Now what I wanted to focus on today is just 3 points. This is not even half of what you need to focus on with an S Corp, but this is some of the key things that I feel are important. One is your ability to save on self-employment tax legally. 2 is the deductions, making sure that you maximize your deductions. And 3 is making sure that you structure your reimbursements correctly. Now, as an S Corp, you cannot simply take money out of your account whenever you feel like it. There has to be certain rules set in place that you're following. So first off, with a W-2, as an S Corp owner, you do have to pay yourself a W-2 wage. And it has to be reasonable. It cannot be something made up. So you actually have to research your industry, research your role, make sure you pay yourself the salary that usually someone else, if you go work for someone else doing the same thing, whatever that amount is, make sure you pay yourself that. The IRS does look out for that. You will have to pay payroll taxes on your salary. However, any leftover profits after that will not be taxed self-employment tax. You get that as a shareholder distribution, and it's a lower tax rate. That's already one way you're saving. The next way is just making sure that you maximize your deductions. So anything that you can deduct for the business that you put under the business, and whether it be you renting an office, utility bills, whatever the case is, you want to make sure that you take those deductions. You as the owner, and this is where the reimbursement, structuring the reimbursement correctly comes in, is you as the owner may be making personal or expenses for the business, but using your personal account. And for example, this could be if you use your car to go to a business meeting or a business lunch or to travel to a convention or whatever the case is, you want to get reimbursed for your mileage, but there's a proper way to do this, and it has to be covered under an accountable plan. So an accountable plan basically tells the rules of when the employee can get reimbursed, under what circumstances, and in what time frames or whatnot. There's always rules, so you need to make sure you're aware of those rules for an accountable plan for S corporations before you start doing this. You can't just do it whenever you want. Or however you want. You have to follow those rules, but you can definitely get reimbursements for stuff like mileage, meals, office supplies, cell phone, different things that you're utilizing your personal funds for, and they're specifically for the business. The S corporation can reimburse you on this. And how does that help you? Well, what it does is the S corp will pay you this money that you've spent, regularly, and you will not be taxed on it. So it's not considered taxable income to you personally, and the S corp does get to deduct it as a business expense. So that is something key that you want to make sure you have set up in place, is the accountable plan, and make sure that's done correctly, and make sure you follow the rules, because that's vital when it comes to having an S corp. For today, that's all I do want to cover. There's much more that we can cover on S corporations, but we'll leave that for a different video. But thanks. If you all need somebody to